your money in what is becoming an even more uncertain world now. Wall Street watching closely what happens in Washington, North Korea, Russia, China, the list goes on. Here to help make some sense of it all, we hope, financial analyst Alan Lancz of Lancz & Associates, in the Lancz letter as well. And of course, with us on 13 ABC Action News at noon, our Ask the Expert segment. Alan, is always good to see you again. We appreciate it.
Thank you, Lee.
You know, from CNBC and Fox Business Channel and everything else, but what's nice is that you can just get in your car and come down here. We don't have to hook you up on a satellite. We can just talk to you here.
Exactly, 5-minute drive.
Yeah, we like that. And I mentioned North Korea here. We had news this past week involving North Korea and the saber rattling going back and forth between Kim Jong-un and President Trump. Really strong words. And you read USA Today, the Wall Street Journal, that, hey, this could make for a very tumultuous market here. And we did have some movement this past week, but your thoughts as you observed all of this?
Well, the market is due for a correction. It's gone straight up as far as for...
Up and away, huh?
Exactly.
22,000?
Yeah, for like 8-9 years. And I think it's a situation where the geopolitical risk is something investors should be concerned about, but I wouldn't make changes or alter things because of that. I think, you know, you want to make changes because of valuation, because of what the economy is doing, because of the Trump agenda. Those investors that look at a headline and get out of stocks because of what's going on in North Korea or China. Usually they're making a mistake. They're getting out at the wrong time, and it's something that I don't think you should be doing. You should be an active investor and try to, as far as manage risk while the market's going up and not bail out when things are going down.
Okay, so, but you mentioned we are due or in need of a correction. Is it both?
Both, really, yeah. Yeah, I think a correction would be healthy. I mean, going straight up is dangerous.
Yeah.
We had a lot of national media, like you said, from Barron's on down, talking about, you know, is this like 1999? Is this like 2007?
Overvaluation.
Yeah, when we warned, and it isn't. You know, it's optimistic, the valuation, Lee, but it's not euphoric. And in 2007, 1999, it was euphoric.
The gravy train, right?
Exactly. Where I think investors, you know, and that's what we did with our clients, take some money off the table. Now you're still finding bargains. There are a lot of companies that are trading at historically low valuations, but then there's others, like the FANG stocks, a lot of the technology, for example, is up over 20%, and then you have energy that's down 14% and telecom that's down 10. So again, we were buying a little energy, a little telecom this past month when oil was hitting $40 a barrel, and taking some profits in these, you know, Amazons and Netflix that have done so well. And I think that's the prudent thing to do. If you're always chasing the market, as long as it's going higher, it's the greater fool theory, but you know, it's always a matter of taking more risk too, and I think managing risk is really critical.
Amazon became the superstar of the summer. They offered to buy Whole Foods, and we saw some movement from Costco. Their stock, you know, reacted, you know, after that news. My question is brick and mortar retail, as far as Wall Street is concerned, Alan, is there any upside going forward here?
Well, there's upside because I think Wall Street has overreacted, and that's what happens a lot of times. It's a pendulum where it gets undervalued and gets hated and low expectations, and that's when, if you find some good companies, there's some great opportunities. Just like now, the technology is getting overvalued and people love it, and you can't get enough.
That's a bubble, right?
Exactly.
Again, another bubble.
Yeah, you know, but it's bifurcated where there's winners and there's losers, unlike 2007 when we warned everything was overvalued. International, real estate was overvalued, you know, domestic, U.S. stocks. So now you can still find some things to buy, and that's why I think, you know, we're not heading for what a lot of people have been asking, is this another crash?
We're getting scared. We're getting, there's a lot of fear out there, and if you listen to some radio, a lot of, hey, just go for gold. Just forget the stock market thing. We're bound to go down. Is that fear-mongering?
Yeah, I think so. There's been a couple people we really respect since May that have said the market's getting too high and investors should pull in their horns and not chase stocks.
Put the money in the mattress, the whole thing.
Yeah, so again, I think, you know, taking out of the high risk and investing in more of the stable type companies makes a lot of sense.
Like, well, I don't want to get specific here. This is not CNBC.
But like the utilities
Okay,
or the foods that are down, the energy. I mean, we bought energy. I mean, you get 5, 6, 7% yields. Even if they don't do anything and oil stays around $40 a barrel, that's not a bad dividend while you're waiting for the market and seeing what develops with, North Korea and with President Trump's agenda, et cetera.
Okay, let me go kind of rapid fire on a number of subjects. Okay, sure. North Korea, it's just a lot of talk right now. It's threats going back and forth. If something were to happen where there would be military action by the United States, then are all bets off?
Not really. I think historically what you've seen is a big sell-off for a day or two, and then
Wednesday.
Yeah.
Although that was
just the rhetoric,
Okay.
But I mean, if there's actual
action,
they're talking about middle of this coming week to launch another missile, and if they aim it at Guam, then President Trump might react. If that escalates, then you're going to see the market down more than what we saw this past week. But again, I don't think it's anything that's going to lead to as a crash like we saw in 2008 financial crisis or even the 1999 tech bubble.
Okay, what do you watch for in terms of economic benchmarks, housing starts, GDP, interest rates? What does Alan Lancz watch and say, well, this is going to be important going forward? We really have to watch closely what happens.
Really, all of it is. It's a constant
car sales.
It's a constant moving bubble, and you have to look at it from a standpoint that inflation. How is that going to be a factor? There's a very low inflation expectations. So buying some things now that will do well in an inflationary environment, just like the defense industry, they weren't doing that well before President Trump was elected. That was a good move because even if this doesn't go into a war, a company like Lockheed Martin that is a leader in missile defense, there's going to be more and more demand.
Ratchet things up here, right?
Yeah, there's going to be more and more demand for there. So those are the things you have to look at. Don't chase now because that's what everybody's buying. Everybody's buying gold now and buying the defense.
Right.
But look at it from 6 months ago. So now inflation is low. They're not talking about things like that. So that's low expectations. You can buy those cheap with lower risk. And if that escalates 6, 8, 9 months from now, then you've got a good return on your investment without taking the risk. And that's that contrarian, lower risk environment that you really want to take advantage of.
Had the U.S. Senate went ahead and said yes to repeal and replace Obamacare, how would Wall Street have reacted to that?
Very, very strongly. We'd be
positively.
Yeah, we'd be much higher because I think that would have led into the tax aspect of tax reform and then an infrastructure program. All that would be very positive for the economy, Lee. So now some of that is priced in, and that's why taking some profits is a prudent thing to do in some of these areas, because if you don't get Trump's agenda, at least the second and third phase now, let's say healthcare is dead, it's going to hurt the economy. And a lot of Wall Street was expecting that. And if you don't get it, that could lead to a more pronounced selling than what we saw in the middle part of last week.
Okay. Do you watch President Trump's tweets closely?
Yes, we watch them. I've never watched or really, as far as did a tweet observation analysis, but because of President Trump, we do that.
Okay, Alan Lancz, thanks very much. 9 good minutes, appreciate it.
My pleasure.
Okay.